Welcome to the Loveland Report and the Lone Ranger Show. I am Cleve Loveland, Central Florida's voice of real estate, alongside Bruce Woodburn, the Lone Ranger. We are giving you all of your real estate news, all of your mortgage news, what's going on. We got a great election, we had a landslide win. What's that going to mean to the housing market and interest rates? We're going to dig into all that today. Bruce, top three things I want to go into.
What are they, my friend?
Trump won.
Trump won.
Winter selling season, and then end of year. We're already in November. We got 6 weeks left this year. End of year planning, 1031 exchanges. We're going to talk about that. Ways to save on your taxes this year. We'll dive into that. What do you got for today?
Well, I want to talk about what's going on with the market right now. What are rates doing? It's really important to people. What can we expect in the future, and what has happened to interest rates since the last two Fed cuts? So that's one of the things we're going to dive deeper into. And then refinancing. Is it the right time to refinance right now? I want to really dive into that. And then I want to get into what loan programs are the most popular for people to get into right now. So I want to hit that, and I want to hit it hard because a lot of people have been sitting on the sidelines, Cleve, waiting for this to happen. Now, we want to talk about, is it the right time? What is going on with the market? And should I buy right now, or should I refinance right now? So these are some big topics that I want to dive into.
Well, with the election, I think a lot of people thought, it's funny, I had people calling me going, hey, can I raise the price on my house? We had a good election. I'm like, no, you can't raise the price on your house. You can, but it's not going to get you, it's not going to get you anywhere. Yes. So, but we got to watch the market, and it's going to take, and it's what's funny is, we're coming into the winter, which is about 20 to 30% slower than the spring and summer, and those sales out there, but rates are driving the sales. And I think there'll be a little more confidence. I've got some people, like, literally after election day, when the next day, that week, I had my phones ringing with people I've been talking to all year long, saying, all right, let's move forward. We're going to list. Let's move forward. I'm going to buy. Kind of a little more confidence, like they know what's going to happen. Hopefully we'll have some sanity return to the White House, to the economy.
Sure.
But what happened with rates? Because a lot of money, I saw the stock market had a rally, which usually isn't that good for bonds. How are rates?
That's correct. Well, rates have not improved at all. They have not improved. We're still running in the mid sixes, some even in the higher sixes. You can buy it down into the fives, but it takes some points to do that. But we have to understand why. And I don't think a lot of people understand why. And I think a lot of people, Cleve, and I'm going to get into this in a few minutes as well, are really waiting to refinance their home. And should they refinance? So I want to talk about that. But if you really want to understand and show your friends or illustrate to your friends why interest rates on mortgages have gone up rather than gone down when the Fed cut the Fed rate, then understand the correlation between the two. So the Fed cuts the Fed rate to stimulate the economy,
yes,
right?
Yep.
That's what it's all designed for. When the economy stimulated, it bolsters the stock market. So we saw major rallies in the
good
stock
rally.
market.
Yeah, it was a good week.
But when the stock market's doing well, it sucks the energy
The money
out of the
comes
bond
out of
market.
bonds, right?
Right, because the bonds are a safe haven for investors when you're in uncertain times. But when you are in times of growth and opportunity, they're moving from bonds into equities or stocks, and it sucked the energy out of the bond market. So ever since the Fed cut the first half-point cut back on September 18th, we've lost almost 250 basis points on the bond market. And now they had another Fed cut last week, and that affected the market negatively on bonds. So it just is not helping. So people want to know, what is it going to take then? Why, if they keep cutting the Fed rates, are the rates going to continue to go higher?
Right.
They could.
Explain to me now. So explain to me, what do we need? What makes the bonds do better? I got almost one full semester of college.
There's two things that'll help.
Understand.
There's two things that'll help, and they're both related. Inflation. Inflation is the arch enemy of the bond market.
And that's down slightly. We're down to 2.5%.
But the market makers and the big investors
still know it's out
don't
there.
feel like it's down enough.
Okay.
So they're kind of waiting for things to happen. So what will it take for us to reduce inflation and improve interest rates on mortgages? Energy. When energy comes back and we start drilling,
we know that's going to happen.
We start drilling, we start fracking, we start doing all this. We've already got the UK now has said that they want to buy our oil from us now that Trump's in there.
Okay, and let's tie this back in. Okay, he won, Republican Senate, Congress, and economy is going to do better. But people should not wait, because what's going to happen is we had Sleepy Joe for the last 47 months or 45 months, and it's been horrible.
Yes.
But we still had appreciation. Real estate still climbed, and around the country, Florida appreciated more than the rest of the country, and there really isn't anything like coming down. Our average price is up 8%. The median price is up like I think it's like 2 or 3% year over year. So like, even unless you bought a house last year and had to sell it this year, you didn't lose money.
No, you did not lose money.
And so that's the main thing. So don't wait to buy or sell right now, depending on what you're doing. I can help you with your real estate plan. They need to do something now, even though the rate might be 6 3/4, or they got a great credit score and it's 6.5. You can help them with that, but don't worry about your payment being $100 higher when the house will be $20,000 more in 6 months.
That's right. That's right. So listen, if you'd like to talk to Cleve, he's available. You can call him right now at 407-352-8118. That's 407-352-8118. Or you can call the loan arranger, Bruce Woodburn. You want an honest quote? You want to know whether it's the right time to refinance? You want to get the best possible rate? I'm a direct lender. I'm in all 50 states. I'm not a mortgage broker. There's no middleman. You're going to get the truth and honesty, and you're going to get the best advice. Call the loan arranger at 407-250-9144 or WeBringYouHome.com. Write that down, WeBringYouHome.com. So I think that it could take longer than I was anticipating, because in order for him to get drilling again, it's going to take some time. That could take as much as a year.
But those companies right now are hiring and gearing up and getting ready to.
They're absolutely gearing up.
This is the main thing. Just Central Florida real estate, we are an attractor of East and West Coast. West Coast of Florida hit by 2 major storms, homes destroyed, people flooded, not wanting to deal with that. We get people from that. We're still getting people from around the country coming to Central Florida. We are affordable. And then you talk about places like Polk County, which is very affordable. Lakeland, one of the fastest growing, low priced, or like the median price of homes is lower there. And it's going to skyrocket once people realize how attractive it is. We are, like you said, we're going to be California. What'd you say our median price is going to be?
600.
600. I thought it was 620, but all right. I'll let you work back.
620.
Right. That's another
2026.
And I got to tell everybody, Bruce bought me the biggest ribeye because he owed me a steak. We got the greatest ribeye. We actually split it. It was so big. And on what was that? That was the bet on the first Fed cut.
That was the bet on the first Fed cut.
I
lost. Okay, all right.
I knew the deep state would get that.
It just happened later. That's all.
Yeah. But I just think this year, buy now, sell now, whatever your plans are, I can help you with that, because it's just going to get more expensive. There was no bubble, there was no crash. You would not believe. It's funny. I laugh at these offers I get in my email, Bruce, on all of my listings. As soon as the listing goes active, I've got anywhere from 2 to 5 offers from these people that just sit behind their desk pumping out cash offers.
Right.
And they're low balls and they're bottom feeders and they're sharks. And all they're looking for is a steal, hoping somebody's not that educated.
You're not getting those steals like people.
And you don't. They never go through. They're all in my spam. But that's never gonna work.
I've got 2 transactions right now, 2 clients right now that were out bidding on homes. One's been on the market for 271 days, and they came in and asked for closing costs on it, and the seller rejected the offer. Now, I think that that's not a motivated seller. They just don't want to sell the home.
Yeah, that is.
I mean, 270 days.
The realtor's got a communication problem.
There's something wrong, or there's something wrong with the seller.
Yep.
Okay. And I have another one. They rejected the offer, and it was a full price offer with some closing costs. So sellers are not as motivated to drop prices as a lot of people think. On the other hand, that's not the case across the board, because I'm getting closing costs paid on a lot.
Well, I think that goes to the negotiations. Nowadays you have to sign a buyer agency contract. You have to hire your realtor. So you want the toughest negotiator. You don't want your sister's brother's friend's cousin.
No.
And you've got to go make sure they are negotiating for you with what's reasonable, Bruce. Because a house like that, you should be able to look at a couple homes, and the one that rings your bell, say, okay, that's the one. You've got to have an opinion. Okay, is that price right? Is it priced great? Do we need to come in at full price? Or has it been on the market, like you said, for 7 months, and it's been at the same price for the last 3 months? That's overpriced.
Right.
So, and there's always things. Our biggest problem in real estate right now, and I just saw something about the national numbers, the number of realtors has gone down. I thought it would plummet, as they say, but it did not. And the trouble is, you got a listing agent that has no training, and they don't have to explain to that seller, okay, where are you going next? You can hang on, if you're going to go into another house and you hang on trying to get an impossible price on your house for 300, and you've been on the market for 9 months, the one you wanted to buy has gone up in price also. You're obviously overpriced, or you're not, it doesn't look good. All these things come into play, but the negotiations is what you're hiring your realtor for. And I've got two of the toughest negotiators in my office that will just tear people up and do it in a nice way and say, this is our offer, this is why, and explain it to them. I have to tell listing agents sometimes, Bruce, I have to send them the comps on their own listing and say, your price is too high. And it's funny, they'll come back and go, oh, okay, I see it now. Nobody taught them how to do it. They asked the seller what they wanted. The seller said $350 when it should have been listed for $299.
I want to tell you, you mentioned something about your buyer's agents. And Cleve's got one of his buyer's agents. Her name is Nanette Edmonds. And I'm going to tell you, I think she's one of the best buyer agent negotiators out there. So, Cleve is an expert at positioning your home, pricing your home, helping you get the most money for it. He's got a buyer's agent that, in my opinion, is one of the best in the market. So if you're looking to go out and buy a home and you want somebody that's going to negotiate for you, then hire Cleve, ask him to connect you with Nanette Edmonds. Nanette is phenomenal. And I'm telling you, her and my team work in concert. We had a client that we just, matter of fact, I think they closed this week, that they were shopping me against everybody in the country. Okay, we got the deal.
I told them that was a futile exercise.
Oh my gosh.
But the main thing is, do you want the moving truck sitting there and the baby crying on your knee and the dog and cat tranquilized in the back of the SUV with the air with the air running?
We don't want that.
And because they didn't close on time, and you call in and your processor's on vacation, and they're running the drive-through teller, because that's what they do also in processing your mortgage. And that's exactly the situation. The other firm, I won't mention it, the other place they were thinking about, they are notorious for not hitting closing dates.
Absolutely, they are. And credit unions never hit closing dates.
Now, on these loans you're working on, you talked about the most popular loan for people. What is that right now for people? Everybody thinks they need 20% down.
Well, your most popular loan right now is a conventional loan. Okay, that's the most popular. If your credit scores are in the high 700s and you're putting down 10+%, it's generally the best way to go. If you are putting 3 to 5% down and you need closing costs to be paid, you're only allowed to get 3% of the purchase price towards closing costs from the seller. But that's generally enough on a traditional sale. So you could be into a home for 3% down. If you've got credit scores under, say, 720, then FHA may be a better option for you. And if you need more closing costs paid, FHA allows you to do that. For instance, my friends out at Southern Homes down in Lakeland, right? They'll pay up to 6% towards your closing costs. But if you're getting a conventional loan and putting less than 10% down, they can't pay more than 3% toward your closing costs. So you missed out on, could be as much as
$10,000.
$10,000,
yeah.
Right? So you want, plus FHA and VA interest rates tend to be a little bit lower. So I've taken people that qualify for conventional and put them in FHA. The realtor goes, why would you move my client to an FHA loan? Because I just saved them $10,000 and got them half a point better in interest rate. What's your next question? Right? Isn't that what you want me to do?
Well, that's
for
what's
your
important
customers?
about having somebody help you negotiate, help you, and a good lender like you in their corner, telling them the right product. And it just amazes me because I've never had you be late on a closing on one of my deals. You rescue about one a month.
I am not late on closings.
I have other realtors that have deals fall apart because, the buyer did this and did that. And it's because the lender did something wrong up front. And I'm like, well, we're not going to extend the contract with you unless you switch over to the loan arranger. So that's really important. How much time we got, Bruce? I don't have a timer on my screen.
We've got about 15 seconds. So let's
okay.
All right.
Numbers. My phone number. If you have a real estate plan for now, for the end of the year, we can get you in a new house, put that Christmas tree up. 407-352-8118 or cleveloveland.com.
Yep, and the loan arranger, you can go to webringyouhome.com. That's webringyouhome.com. If you're in Tampa, you can call me at 813-213-4009 or the Orlando area at 407-706-3313. That's 407-706-3313 or 407-250-9144 for the Loan Arranger. Right here, we'll be back in 5 minutes with more of the Loveland Report and the Loan Arranger Show. Don't go anywhere.